The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technicians Hour. We're looking at the Dow, now only down 13 points, coming back very nicely. The S&P, well, look at this E-mini here. Let me just do this Technical Friday today. So what I'd drawn in was in the 10-minute chart on the E-mini, and all of this pertains to all the charts. This is the same technique over and over. There's this huge bull formation after that peak D that was made at about 10 o'clock yesterday. I was on the air when I said, okay, peak D, we're going to watch what happens. And that was at about 40.20. Now look what happened. It went to negative. The 9 period went under the 14 period moving average at 11.50 at about, this is a 10-minute chart, 4,001. And only did it cross positive this morning at 2:30 in the a.m. It went to 38.90. So that's using the 9 period moving average. Then it ran up to a peak F. It was left side, right side price time match. This bar symmetry plunges down. And this is what I'd say mentioned in the den. So at that 8:30 time frame, remember this is Technical Friday, so I want to get into the technical, some of the Chapman wave techniques. So I drawn in right here that this was a Chapman wave green Roman candle where the price opens, plunges, has a slightly higher wick, a tiny wick, and then plunges and then closes halfway to 3/4 of the way off the low. And then what I said was 39.03 is in the Chapman wave green Roman candle, that is key support. If that gets taken out, then it should quickly test the low of this morning at 38.92.50. And if that gets taken out, 38.84, so it would be the next support. Well, lo and behold, within the rectangle formation, it made a little arch formation. Remember the rectangle, a large rectangle formation. If it starts to make higher highs and higher lows, there's a chance that it can go to a leg D, a peak D, just under, right on or just above the previous flagpole high. That's the high that was made at 39.41.75 at about 8.33 or 8.32. And then look what it did. It did double top. And if you do the measure, look at this vertical move. Look how let me type it in here. Look how the technicals on this high at peak D were quite strong. And look how they were weakening here at peak E. And that said, you're going to probably get an arch formation going all the way back to test this particular low right here. That's the low of 39.35.50, and that was the low of 8.35. Well, lo and behold, it took a long time to do. It went from a wide rectangle to a narrow rectangle, took out the base, and that was it. And then it took it all the way down. Then a little while back, I started to draw in the cup. Remember, I like to look at cups and arches all the time. So I drew in the cup formation with the price symmetry of this particular bar. And I said, the left side price symmetry from this bar to the highs that were made. And I always could bump up against the Grand Canyon cliff on the left side. So at 9.35, the bar that had 39.08 as the high, I said, that's the bar. But there should be a price time match, which should take you to, in this particular instance, I said 10.02. And there's a Chapman wave. This is called a wedge formation. This is the price resistance target line. And that wedge formation said that at 10.03, there should be, that's the target. And lo and behold, at 10.02, it went to 39.08, pull back. But look, it's still walking the 9 period moving average, and it's gone to the requisite in the Chapman wave methodology, a buy signal to a buy mode, says go to a PD. So I thought I'd take you to that particular point with the techniques that I like to use. That applies to everything that I discussed now in this Friday edition of the technical aspect of the Chapman wave on a Friday. Fridays I usually get more into the technical stuff. Oh, and by the way, if you were looking at, let me just go back to this. Let's go back to what we were looking at yesterday or the day before. We were looking at, I had a question about BITO, and we were looking at that. Let me just get there for a moment here. Oh, I have to go all the way back. All right, I can't go all the way back. And so our TFNN listener wanted to know about BITO. BITO, and that is the Bitcoin. Oops, I've got myself a bing, bing, bing. I'm going to listen carefully to what's being said. Yes, that was right here. I didn't do it on BITO. I thought I did, but I don't have it notated here. So that was Earl in Seminole. We were looking at the BITO, which is the, what did I say it was? This is the ProShares Bitcoin short. Yeah. So now look at this. So what I looked at here was, look, there it is. That's the analysis I did. And the reason I did it was a couple of days before I was asked about Bitcoin, and I hadn't actually done anything on my show in terms of Bitcoin because I've ignored it for quite some time now since we had fantastic gains in the GBTC, the Bitcoin fund, about, what was it, almost a year and a half, 2 years ago, and then just kind of stepped aside. So within that context, I decided to look at it. And then I remembered I had written in here, Chapman wave, flat base restart to 22,300. I forgot completely about it. That's based on a technique that I use called the Chapman wave unconventional flat base restart. That explains the whole technique. It's a lot of words, and you've got to try to remember the words. But basically what it says is if after peak D you go quickly within 2 bars or 3 bars to a new high, but it keeps coming back to the low of either E or D, it says it's a flat base restart. If it takes out the low of E/A, watch out. That's called the Chapman wave flat base restart, and it means that it could still keep going higher, but at some point it's going to take out that support. And lo and behold, it took out that support, and now it's trading at 19,870 after making the requisite peak D. There, I thought I'd go into that. Next question I had was, if I could look at it, let me just find it. FXI, someone had, I think GT said he had puts on that. I haven't got that in front of me right now. I'm just trying to do it by memory. Wow, that's working well. Now it's finding a little bit of support, so you got to be, at this particular point, I take something off the puts. I would still keep the puts, but I definitely, as a reward and as money management in this H pattern, which has gone below the left side low of end of February, I'd just take a little bit of as a reward. But the weekly chart says this is still problematic, that huge run up is still seeing a lot of takers on the short side. All right, I'll be back in a moment. Basil Chapman, Tiger Technicians Hour, and we're looking at the Dow now down 32, S&P's down 16. It's going to be a struggle. And I haven't even touched the XL. If you remember yesterday, I said, I just don't, for a few days I've been saying, I don't like the way the financials are acting. Well, we'll talk about that when we return.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so it's Technical Friday, so I just want to show you at this low that was made at about 949 at, 3878.50. You got your 4 peaks going to peak A, B, C, D. That's the 4th highest peak. Now there's a bit of a pullback. It did flip to negative for the moment, but I'm seeing some support here at the 38.90 level. So keep that in mind, 38.90 in the very short term, 38.90. If it gets to 39.87, then it probably is going to go all the way back down again. But right here is where you should see some attempt, another attempt, this part of the day in the 10-20 hour. This is where you should see some new players come in. That's all I'm looking at. But we've got a 50% retracement so far. Is that a 50%? Yeah, it's about a 50% retracement in the 10-minute bar from the high to the low in the E-mini. And that's kind of where the sellers start to creep in. So this is a real fight between buyers and sellers. My overall thing here is that yesterday we were long. We managed to do that when we were going down to the October low, the last 5 or 6 sessions. You remember there were big spikes to the upside, and then there was a sharp turn to the downside, and we were able to use short-term trades to get the longs. But it's so much easier if you stay short. If you were short and you stay short, you don't have to do anything because the trend is down. So right now the trend is down. Remember, we've been talking about that for some time, that the trend in the Dow had flipped to about, the 15th of the month, had flipped to negative. But there were really strong rallies. We got some of those rallies and did very nicely, gave back some of that yesterday on the pullback. Now, what we're looking at is the XLF, the financials. You know, I kept saying this is the first time in about 7 years that for subscribers to the opening call, we have not bought Bank of America. It had acted so poorly. We got out of it earlier last year when it ran up to the... I don't think we even, yes, we bought it back in October of 2022, ran up to 30 from in the 31 area, it ran up to 38.60 and then came tumbling down. We didn't play that long. I just did not like the action at all. And now it's gone 29.31. Well, this is amazing. 29.31 was the low, October the 13th of 2022, ran up to 38.60. Then had another brand new buy signal, which we did not take, around about the 18th or so of December in the 31s. and ran all the way to 37 at a peak E over the 200-period moving average. But remember the conglomeration of price movement above the 200-period moving average in that whole November period, and then it broke down, and then it took a long time to get back. Well, I didn't like the fact that it was going there, and it had a kind of a choppy formation underneath the previous high of 38.60. I never like a buy mode to break down below the previous. So, did I have a caller? Oh, Earl is on the line. I did not realize that. Sorry, Earl. I didn't realize that you were actually waiting. I thought my engineer was just reminding me that it was Earl. Earl, if you want to call again, I'd appreciate it. He even spoke to me. Oh, Earl, I'm sorry. So, Earl, if you do have time, give me a yell. I just misinterpreted it, and I couldn't see the information in my engineer's room. So here we are. We're looking at Bank of America. What does it do today? It goes to 28.92. Just takes out that left side low of October, trying to rally here. But look at the monthly chart. It's making lower lows, and that's not in arch formation. I'm concerned, and yet I know that the banks, the big banks, these are the money center banks, all the regulations that they've got, they've had to be building up a good kitty, a good kind of a pie as a security. So this to me is something's going on here, and it might be because it's the rate scare. I don't know what it is, but the banks are not acting well on JP Morgan, which was one of the better acting banks. Look at this. It makes this beautiful series of highs up in the 143, 44 area, and now it's trading at, made a low today of 127. All right, I just heard that, and I believe that we have Earl on the line. Earl, how are you?
Good, Basil. I was just calling out, yesterday we talked about BITO.
Yes.
And I stayed in it, and at the end of the day, it turned to be very profitable. And I was just looking for any more downside. What do you see as a further downside?
So let's look at it in stages. The gap that, you remember I spoke to you about the gap? I said there's this gap at about in the 12s. What was the low? The low I said, 1294 was the low on the 18th of January. And the day before the high was 13.62. Well, today the low is 12.06. It's already taken out. It's already filled it. But if I'm looking at my technicals, I would go with the on-balance volume that I've been looking at, and I think it needs to go a little bit lower. So this is the only thing I would say to you is the trend right now is down. It is very solidly down. To actually make a change in the trend itself, it would have to get to 1380. Folks, we're looking at BITO, that's the Pro Shares Bitcoin short. It's trading at 12.14, down 21 cents. It did go to 12.06 earlier on. So I'm looking at this and thinking, you've got at least 2/3 of what could be the potential to the downside, just by eye, because I think there's a chance that it's going to test 1140, and that's going to be that whole area of 1160 to 1120 is going to be absolutely imperative to hold. But the other aspect that I'm looking at is that the weekly chart still has some strong technicals. So to get those technicals to weaken, you'll probably go all the way down to 10. But I respect when the technicals are strong, because it says that at any moment you could have not just a bounce, but a stronger move than a bounce. So I'm going to just say to you, in terms of money management, I would prefer, now this is me, you're the one that got into trade, you've held the trade. I don't want to actually mess with you at all, because you're the guy that did the thinking to get in. I'm the one that's now just a bystander saying, oh, look at the traffic. There's a traffic light over there, and it's about to turn green, or it's about to turn red. So I'm going to say to you, what I would be doing is if I could take a little bit off for money management, and that little bit off, I would set aside as something that I might use in this particular position to put back. But the whole idea here is that if by Tuesday, there is a bounce that can go, if it takes today, if it breaks 1190 by the end of the day, I would just hold it because it should be an ugly opening on Monday. But if, in fact, there's a bit of a bounce, the area of about 1262 to 1283, I'd look at that. If there's a bounce in the next day or two, and then it fails at that level, that next turn down could see the relative strength break a little bit lower, and that's really what I'm looking at. If the relative strength was stronger to the downside right now, I'd say I can see a stronger rally. But at this point, it's just saying there could be a bounce. So here's my thinking. Take a little bit off for money management, and that part you put back on if there is a bounce in the next two, including today, in the next two sessions, maybe even going into Tuesday, towards the 1268, 1285 area. If that starts to fail, you can put that back, and that'll be your next little trading bit to add to your short position. I hope that helps you.
Yes, it does. Thank you.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, so this little H pattern right here, this little arch, it mustn't take out this left side low of 3887, sorry, 25 in the next 2 minutes, 2 or 3 minutes, because that would say, uh-oh, now you're going to test the next level on the downside. This is a really important to find a little bit of support. Okay, so within the financial sector, those were the money center banks that I was just looking at. But when you look at SIVB, look at this. I guess it's not trading right now, actively trading. It was stopped. So it's at 39.40 in the last price, down 66%. At minus 66, it's minus 62%. I mean, what do you do? One day you trade in the 286 area, and 2 days later, 2 days later, you're at 39.40. 39.40, that's the price of the stock. That's almost like you would expect on a very, very bad day. That's the price that you'd move down or up, but not the price of the actual equity. And look at this. When you look at, I hadn't looked at this for some time. I did this a long time ago, and then I completely forgot about it. There's a left side, right side price time match from the low that was made back in 2009, March of 2009. Oh, 2000, that was when we got the major buy signal in the Dow, the day. What was that? It was, that's a monthly chart. Okay, that was that was February. Okay, we got ours in March of 2009 on the 6th of March. That's right. All right, so this is right here on March of 2009. Yeah, it is. March of 2009, the low was 1158. And here's a stock that went peak ABCD, then it goes peak ABC1, C2, and goes to this double top. I don't even know why I did this, because it's something like I don't usually follow it all. In fact, I didn't even remember the name. Usually I remember the symbols, not always the names. And it hit 763.22 November of 2021. And then there's a time price match to that particular low that I'd chosen, but I didn't even look at this. And that would have come in, so that would have missed completely in January of 2023. That would have been, I would have said, there's no way on earth, I don't know why I even did that. There's no way that this thing could go down to that level. Well, look at this. SVB Financial Call. It hasn't opened yet, and it could open very close to that level. So all I'm saying is that within the context, there's a difference between the money center banks, and this was what? This was, I think, for most of the IPOs, they did a different thing completely to what the money center banks did. So we'll see what happens there. All right. So I want you to look at this, and I want you to say to you, within the context of the different sectors, when you're looking at, for instance, let's go to the SMHs. The SMHs, the semiconductors, have held extremely well, even under duress today, down $1 in the duress in the market. The semiconductors at 240.53. This is the first time that I can say in the monthly chart, in the weekly chart, the left side, right side price time match that we have, I have to probably extend it now, or it's already past the due date. So now I can't take it from that level. I might even have to take it to the low that was made right there in the 160 area back in October. Might have to push it out a little bit. I'll do some work on that this weekend when I do my overview for my subscribers. So every weekend I do an hour overview, about an hour overview, looking at the different sectors, different stocks, what we're looking at, why we're looking at them. I might not even take those in the next week, but I'm looking at them saying, these are clues to what's going on. And the rally that we saw, I looked at the SMHs, and that was, look, this is 1, 2, 3, 4, 5. So this is the move that we were looking at. I said, look, after a fantastic move from the 196 low in December the 28th to the high that was made, I didn't type that in, I should type that in. That is at 255.64 in the second. Oops, I can't even remember what I said. 255.64 on February the 2nd, Feb 2/23. There was a pullback to the 230s. Yeah, that's 20%. It's a good 9-10%. But we've come back, and we're actually holding well. And that's the reason why I said I'm being very selective for subscribers to my opening call. Instead of what I should have done, shoulda, coulda, woulda, big deal. If you don't do it, you can't complain. But I do want to point it out because I like to show when I'm right and when I'm wrong. When we flipped to negative right there, went underneath the midpoint of the mid-channel rectangle formation, it was just an easy switch. Just you go short immediately, and you stay short until you get the sequence that says you can go long. I didn't. Instead, what we've done is we played upside spikes, made some money, but the easy trade was just to stay short. I don't know if I would have stayed short with a big move up there. That probably would have taken us out. The move up to 33,572 in the Dow. So this is going to be very important. Why? Because we're in the arch formation in the dreaded H. This is the first week we've closed underneath, or we haven't closed yet, but I'm pretty sure we're going to close. Closing underneath the low of the 23rd, week of the 23rd of December at 32,573. We are 300 points, 350 points below that. So this is a really important moment. You've got 2 bars. That means sometimes I say 3, let's say 3 bars, 3 weekly bars, in which to close decisively above that. And then you have to wait for buy signals to change, be able to say you can break above the arch. But you could get a decent rally to the 23,200s. That would be good. So we're watching. And not only that, the month is not even halfway through, and we've already got the 9 period in the monthly chart crossing negative. So I have to wait all the way to the end of March. But so far it's crossed negative. That's not a good sign. I'm just being very careful. We have got very select areas. We've got stops in place. I said that split positions we could go to a second position, but today I said skip the second position, because if we really crunch to the downside today, I don't want those second positions with a horrible Monday coming up if we close very badly today. So ZW, is that the bonds? I'm just a question. I never remember now. ZW. What's the ZW? Is that ZW? Yeah, just hello, if you can just tell me what the ZW is. For some reason it is wheat. I just, for a moment there. So here's wheat. Does wheat? We're looking at a little rally coming off the low today of 661, round number low. We've gone from the 800s to the this is amazing, to the 660s. Now there's a little bit, you can see the little V-shaped pattern in the on-balance volume on the daily, but the stochastic's still very, very weak at 4%, and the MACD's histogram still expanding. I would just say this, that ugly bar of yesterday, it would take a close above. So the question, I think the question is probably, is this ready to move to the upside? And I'm just going to say to you, it is so oversold. It's in a leg E in the weekly chart. It's in a leg B in the monthly chart, which was once at 1,400 and is now in the 670s. So this can only be treated as a bounce. And the bounce is, the time, I've got time to do this. The bounce is, the halfway marker of this ugly candle would be 680. You're at 673. It needs 3 sessions from this ugly red candle from, I'll talk about it when we get back this time. Wheat is up $8 at 670. I'll be right back. Dow is now down 45, S&P's down 17.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yes, we're back. So I just want to finish up with the wheat. So if this is going to be a low, not the low, but a low that's a tradable low, you need to see wheat close. You can't just hit it. It's got to close above 680, at least one session in the next 2 or 3 sessions. That's just the first step. But that says that it has to be a stair-step move, or it could be a single day, I don't mind. But it needs to at least be a stair-step move, making higher lows, but much higher highs. And that needs to get to the 695 level, which is the 9-period exponential moving average on the continuous contract. So I hope that helps you with the wheat. All I can say is if at any point in the next 3 sessions, if it takes out today's low of 661, I actually don't know where the low could be, because that just says that would be very strong weakness. Strong weakness, a little there. So I wanted to just say there's a very interesting comment here in the den by Shazam. I said it before, and I maintain my opinion. The Fed, through its trading desk proxies, is directly infusing dollars into the market using computer-controlled management of the expectations. They speak of a soft landing because they have designed and are actively using algos that buy at precisely control points to manage expectations via the behavior of the charts themselves. My opinion, and I'm sticking to it. So within the context of your opinion, I personally can't have that opinion because I just don't know. I don't follow it closely enough. But my opinion has been for some time. So let me go to this for the moment. I'll give you actually, let me do this. Yeah, I'll do this. For some time, my opinion has been that from the October low, I'm anticipating sudden, the high lows and higher highs, but with then sudden, really sharp 2,000, 2,500 point declines. Make it a weekly chart. That's much better. A weekly chart showing you what I'm anticipating. Now, I could be totally wrong, but I've been anticipating that it gets scary, 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 but then whatever it is, and it could be Shazam's intuition here that the Fed comes in, but if we use time not to have the crash, for instance, if today, regardless of what I'm saying right now, if the Dow closes down 380 or more, and the S&P closes down 65 or more, Monday could be horrendous. It could be like a crash session. It doesn't have to be a crash. I'm saying like a crash session. In other words, just a hole. It just screams to the downside. But what I've been looking at here is that we get these sudden spurts because there's a lot of activity here that's bad. I've been talking about a rotating recession. Don't tell me when you look at this chart that there hasn't been not a technical recession in the true sense of 2 quarters of negative earnings. But if you look at this Dow chart, this has been a recession from the high of 36,952. If you look at the SMHs, the semiconductors, oops, I typed it in the wrong place, type it in over here. Look, SMHs. that has been a recession. Now you're sort of coming out of it a little bit in terms of price. I'm talking about earnings per se, but actually some of the earnings have been surprisingly good in the semis. What I am looking at here is that if we can maintain a really choppy, sideways, highly volatile, scary, just getting everybody, scaring the daylights out of regular people who have money in the market and are just saying, I'm looking at my portfolio. It's shrinking every month, even with this rally to the upside, because I've got a mix of, say, bonds and whatever it is. I'm overall not doing well, not breaking down so that I'm about to cry, but I'm really, really nervous. I hear it from a lot of people. Well, if you're looking at this chart right here, we could, in fact, stumble through for the next 6 to 8 or even 10 weeks, making slightly higher highs, and then sudden sharp pullbacks, but constantly holding the October low. And that kind of fits in using up time. And then at some point, believe me, you will get businesses saying, we're not hiring right now. We're not sure at all of what's going on. And then you will get one week where all the results are exactly what the Fed would want, and the market, by then you might have already made, you remember I talked about the internal low and the residual low? I'm saying that there's a chance that this is the internal low, and sometimes you have to wait. I don't know if any of you remember, but there were times since 2000, actually it goes even back further than that. I remember noting that the semiconductors would make a low 6 months before the S&P, or sometimes the S&P would make its low 6 months after the semis have already done theirs, and they rotate. So we could get, look, here we are, October, so give me 6 months. So it takes me to October. So call it October. Am I going to talk about it as November? Let's call it November, December, January, February, March, April. So we're right in this time frame where there could be yet another scare to get that residual low. But I'm just wondering if all the work has been done and the news just, you know how things work. It's like, I don't know if you've ever had this experience in any particular account where you're watching it closely, and you're not doing all that. I mean, years ago, I remember this was when I switched into going into options, which I'd never done before, and always have a learning experience, a School of Hard Knocks, graduate School of Hard Knocks. And then I made every mistake in the book. But the end came so quickly. And then I had to refund that particular portfolio. And I said to myself, wow, it happens. So that's the same thing here, where all of this is building, and this is a really good clue. The financials are a good clue. SIVB is a good clue. But the real, so we've seen internal low. We're waiting for that residual low. That's what I'm looking at. That kind of fits in with your discussion. And if that's the case, and believe me, I remember reading in, I can't remember which book it was, when I did a whole study on the 1920s, 30s, I read so many books. I went through the files. I went through I don't know if microfiche, anybody even knows what that is. Went to the library, Boston Library. I would sit there getting I've got some of them left here. Actually, no, I just threw the other day. I decided I'm cleaning up. I can get everything online. Why should I have all these papers lying around? But I had the newspapers, big full page. I mean, like I'd blown them up to about 3 foot by 5 foot or something. Some of these things from the pages of the was it the New York Times or the Wall Street Journal? I can't remember. Anyway, and there was a really good person who wrote the financial report, I think it was in the New York Times, and he predicted that 90 was one of the few people I read that actually kept saying, this is not good, 1929. He was saying, watch out, this could end very abruptly and very badly. And one of the only ones that said, Babson said it 3 times. He was right the 3rd time. I think the market moved up 60% against him one of the times. But the last time was on September, I think the 3rd, 1929, when he said, well, watch out. All right, I'll be back. Dow's down 101. S&P's down 26. We'll be back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So let me just do this quickly because we've got the last segment to go, and then I think Steve Rhodes recorded his show earlier. So I'm going to put that in there, So two questions. One was a statement about a call option on XPEV. I'll look at that in a moment. And the other is WPM. WPM is precious metals, weakened precious metals. I think the silver, a beautiful candle here. So you've got to look at all of these different instruments in the gold and silver area separately. They're all doing different things, but this is a great move up 6% today at 41.52. That makes 40.53 support. And if it has to break the Chapman Wave inside track repellent zone and get to 43. And I would say speed is of the essence here if it's really going to break out. If it's just going to move steadily to the upside as an oversold position, then maybe by Tuesday after a pullback it has another spike. But if it by Tuesday at this time when I'm doing my show, if it's touched 42.10, it's at 41.52, that's going to be a really good sign. The weekly needs a lot of work. But this is a good sign for the day. I hope that helps me. That was who was that? Abe in the Den. Oh, my father's name was Abe. Next one was what did I say? XPV. Here we go. I'd be a little careful about call positions here because XPeng designs, develops, and manufactures smart EVs. The rectangle formation in the weekly chart says, it's making lower lows and lower highs. Just all I can say is if it breaks 7.80 in the next 2 days, it's going even low. It's going to test the sixes. That's the way I'm looking. It needs very quickly to get to 8.71. So with that said, let me just say, I think there's enough signs here to say they're going to try. I don't know if it may be just a midday thing to try to rally sharply here. We're off the lows nicely. Let me just go back to my E-mini chart. So let's make it simple. If the Dow is able to, after 130 to 220 this afternoon, if the Dow is plus 55 or more, I'd say to subscribers plus 100, I think that's just too adventurous. But plus 55 or more and holding, that possibly alleviates a really bad close so that Monday becomes horrible. You want to see that because there are a lot of good things going on here and bad things.